While others missed the moment, these leaders saw the signal and made the bet. In this episode, Siddhartha Jha, CEO of Arbol, reveals the bold bet that redefined how businesses think about weather and climate risk. Welcome to This Way Forward with Charlie Newark-French. My guest today is Siddhartha Jha. He's the CEO of Arbol. Arbol helps companies think through their weather and climate risk that they face. Sid, thank you for joining me here with This Way Forward today.
Thank you for having me here.
You know the format. This is hopefully a 10 to 15 minute discussion, all centered around a big strategic bet you faced, ideally one that paid off well. Would you kick us off by just telling us a little bit about that strategic bet, and then we can go from there?
Sure. Before I get into that, I'd just like to give a couple of sentences of context around what Arbol does.
Awesome. Thank you.
So our goal is to provide end-to-end financial infrastructure for climate risk transfer. What that entails is markets like sectors like property, where people are losing insurance coverage due to climate events. People are crop yields are flattening in many areas on the farming side due to climate events, and the energy grids are getting more unstable again due to volatile temperatures, wind speeds. We are on a mission to build that financial resilience. So creating financial products, pricing them, and distributing it from client to capital providers, bringing new capital into these markets, bringing new technologies, and sort of rebuilding that infrastructure around how we deal with climate events that are getting more and more costly and causing a lot of pain to the incumbents.
Got it. Well, it's certainly a highly relevant industry. So tell us a little bit more.
Yeah. So in terms of a strategic bet that we made, we started out working out with farmers and agriculture, and we continue to do so. And then added energy. And what we were for many years of our beginning we were essentially on the fringes of the insurance industry. We were doing supplemental products, things that were not easily covered by regular insurance, and just finding these niche areas to insert ourselves into. In 2023-24, we made a massive bet to get into the traditional part of the market, and we ended up purchasing a property insurance carrier, where it's essentially an attempt to hybridize the system. So we write property insurance now from Florida to Hawaii, with a focus on coastal areas, specifically the areas that everyone is abandoning, where insurance rates have skyrocketed or in many cases just not available. And so we made a massive foray into the core of the space rather than operating in the fringes.
Got it. Okay, before you carry on, so you are going into a space as everyone else is exiting a space. It sounds like it's a needed product, but it also sounds like an extremely tough to justify market to go after. Tell me a bit more about like how you felt confident about going into that space as everyone else is leaving.
Yeah, I mean, the confidence builds over time. I would say there was definitely a lot of uncertainty. There was a lot of skepticism, especially, for example, going into the Florida insurance market, which was struggling with a lot of issues, not just climate, with regards to litigation, laws that were very unfavorable to insurers. And of course, then on top of that, the climate risk. So it was a difficult decision because there were so many arguments against doing this. I think that confidence was there because we had built a large amount of process in the ensuing years. And I had gone through a lot of ups and downs in a space that is very difficult to break through the walls, right? The barriers to entry in insurance are enormous. And so we had gotten a lot of practice figuring out how to make things work when it's not easy or obvious. And so we had, we had built a lot of technology. We had built a lot of inroads into capital markets. We had built a lot of networks, and it was like, okay, maybe now is the time to make this leap. Though by no means was it obvious.
Okay. It sounds like there were a lot of people that were resisting this. Who were your biggest naysayers? Was it your investors? Was it your employees? Was it I don't even know the customer base? Tell us who was most anti this. or most cautious?
We've been lucky always to have investors and employees who have put a lot of faith in us. So that part was okay. Of course, there's a lot of details to go through. It's a very complex market to enter.
Yeah.
I think most of the naysaying was like the external, like prospective investors, and you know, because for a good reason, there had been waves of bankruptcies. There had been massive exits in this market.
Yeah.
And honestly,
of insurers, of your competitors,
a lot of
basically.
Insurers had were either in distress or had declared bankruptcy.
Yeah.
The market was, essentially broken, and the government had become the largest insurer of last resort in many markets, such as Florida, or one of the largest.
Yeah.
You know? This was not a great situation for anyone, including the government. That's not what they're in it for, right? They're not here to write insurance. There's a lot of risk to take on, and the private sector was struggling. So I think when we thought through this, we had to be very, very thorough and make sure that, you know, we spent almost the entire time on what can go wrong. We could see the upside. If it worked, great. But there was so many hidden layers of downsides from both regulatory to climate. And we had to be very careful on all those fronts.
Yeah. And so how's it going? How are you making this a profitable bet? Is this through like just charging a lot of money? Is this through like really picking which sites are less risky, more risky? What's your edge? And I guess, is it a successful endeavor so far?
So far, it has been very successful. We have turned around the business. It's it's on a high frequency pace. It's delivering 2 to 3x the business that it was when we took over. And it's a lot more stable. Financially now. I think there's a few things. It's less about charging more money. It's mostly around how can we be more strategic about where we write risk and where we don't. Really understanding the climate risk on a granular level. How do we also, an insurance company at the end of the day is taking in premiums and then reinsuring some portion of it.
Totally.
So how can we reinsure more at a more reasonable cost? How do we bring in new capital into these markets than just traditional players? And that's where all the work we had done in the early years, where one of our specialties is parametric insurance. Insurance that just pays on database triggers rather than an adjuster coming to you.
So you're finding you're taking more data to give a better risk assessment.
Exactly. And then building novel financial products that reference that data to bring non-traditional capital into these markets. And then in the internals, completely overhauling that to be essentially a set of AI agents driving the sales process, underwriting process, and claims process. We've been able to source and been lucky to source incredible talent that normally wouldn't be operating in the property insurance space, right? But we almost act as a bridge to get these talented kids and employees to have a chance to reshape how an insurance carrier works. So make the cost base a lot lower, make it a lot more resilient. With the advent of generative AI and then some older methods like computer vision, you can basically have a deep understanding of the property without necessarily sending home inspectors and having qualitative assessments there. You can make claims a lot faster. You can make it a lot more precise. So it's like a technological and a capital structure overhaul. All at the same time to essentially lower the cost base. And as you write more intelligently, that nice feedback loop. You have a lower cost of reinsurance as you write in better areas.
Okay. It sounds like you're still very much in the thick of it, but tell me a moment of doubt where you were like, actually, this just isn't going to work. The climate is existentially against this system or something. And how did you get past that moment of doubt?
there are doubts that almost appear all the time.
Yeah. It's like
you know,
surviving one doubt and then getting to the next.
Exactly. And the negotiation process was tough.
Yep.
There's a lot of complexity.
Yeah.
In an insurance company's accounting.
Yep.
Even those things had to be learned and quickly learned.
Yeah.
Get that insurance accounting textbooks to make sure that you're not missing anything.
Yeah.
So the doubts were numerous, and there was more of a macro doubt, right? Like,
yep.
Why is everyone else running away?
Running away, right? Yeah.
And so certain things that helped were I could see certain very sharp players in the market
yep.
actually starting to expand in this area.
Yep.
While the headlines were extremely,
yep.
apocalyptic. So that always helps, maybe watching out for that. By the time everyone's on it, it's too late anyway. So you want to be watching out for that small turn in the thing.
Yeah.
It was also very helpful that the state governments here have been taking a proactive approach
yep.
to making the laws more normalized, the regulations more normalized,
yep.
and essentially allowing insurers to charge prices that are reflective of risk.
Yep.
Because if you don't, then it's you're never going to actually be able to write that risk.
Yep.
So a lot of different little pieces were
yeah.
giving really good signals
yeah.
under the surface of very poor headlines.
Yeah, makes sense.
Helpful.
So, look, one of the existential problems a startup faces, and I think you're probably facing this, is you go out and take all the risk. If you succeed and prove the market is as you think it is, the big guys come in. That's sort of what you're alluding to there. How do you protect yourself over the next sort of 3-5 years from, how do you stay at the edge and stay ahead of those big guys?
It's a challenge for sure.
Yeah.
I tend to view it as, if we cover all details
yeah.
and we really make an entire system better, then we will have that right to win, so to speak.
Yeah.
So one of the things that I've always been focused on is that we can't just do one piece of the process.
Yeah.
It's not just better climate modeling.
Yeah.
It's not just better underwriting. It's not just better claims.
Yeah.
And there are many companies that have a great sort of edge in one of these pieces.
Yeah.
I've always believed that the way to
yeah.
Truly have that moat is to do the whole process,
yeah.
reinvent the process from customer all the way to capital. In the case of insurance,
yeah.
that's your chain,
yeah.
your supply chain. So it's like having a piece of every part of the supply chain
yeah.
to reinvent it.
Yeah.
And that's something that even the incumbents don't really have in insurance.
Yeah.
Insurance is when you buy something like an auto insurance policy or any of the standard ones,
yep.
there's probably 6 to 8 layers of intermediaries between you
totally.
and the person who's writing the risk.
The end insurer, yeah.
Right. We are trying to have a piece of every piece of that,
yep.
which will give us that advantage versus even the large incumbents who, because they are large,
yep.
they become a little more
separated from reality, I
separated
guess.
from their clients,
yeah.
and have a difficult time revamping
yeah.
their distribution.
Yeah, if you're trying to change it and there's 8 different parts you have to get agreement on, it's
right.
much harder than
it's a very
nimble
brittle system. Yeah.
Yeah,
it's a system that has been this way for decades, and
yeah.
it's very hard to change it unless you get in each part of it and just kind of reinvent how you deploy technology and capital.
Yeah.
So.
Got it. Okay, 2 more questions for you. We're not here to talk about climate change, but you're so deeply in it, I can't not ask you this question. What's the future for businesses in the world of insurance from a climate change perspective? If there's no insurance, I'd imagine people just move to the safest possible areas in the world over the next, 10, 20 years. If there is insurance, do people stay in risky areas? How does insurance change the way businesses and people live in the future of climate change?
Insurance is one of the key pieces of financial infrastructure.
Yes.
I would put insurance and lending as 2
yes.
enormously important pieces of financial infrastructure.
Yeah, for businesses and for people.
For people and
yeah.
for a society to not just focus on the present,
yes.
but how you plan for the future.
Yep.
You can't be worried then about every event in the near term,
Yep.
affecting you.
Yep.
It's a way to put a small amount of money that then covers a large amount of risk.
Yep.
So it's incredibly important. So I don't think moving to safe areas is even feasible, partly because climate patterns are always shifting.
Yep.
This isn't we personally, myself or the company, we never discuss about the causes of climate change, because that's a different conversation altogether.
Yeah, sure.
It's happening, and it's happening in the most sort of clear way in terms of people losing insurance coverage,
Yep.
people seeing extra costs.
Yep.
Right? So for us, the goal is, okay, forget the causes.
Yep.
We got to make things more resilient regardless of the
Yep.
causes. So going back to where as the patterns of climate risk shift. So when you had the floods in North Carolina, that was considered an extremely safe place from a flooding standpoint. Certainly, you would not have foreseen a floods of that scale in that area.
That's not what insurers were thinking about.
Right.
Yeah.
And so what we need is a more cohesive system.
Yes.
That covers risk at a very broad level.
Yeah.
Rather than
if you had
just
the right data, you could have
piecemeal.
been ahead of that, I guess.
And even if you're not, if you can have a broader set of coverage across a wide array of areas that is cohesive and makes sense, instead of piecemeal approaches where, okay, well, we're going to subsidize this kind of insurance by the government, but we're not going to subsidize other kinds. And so only, you get adverse selection a lot in these programs where only the most risky clients are signing up. And you're seeing the effects of this, like you have a massive problem with the flood insurance that's offered, from a federal level. At some point, the pricing has to make sense, and that will be the market signal for, where to build and where not to build. I think a massively underutilized thing is also better incentives for more robust building. Right? There's not enough of a mechanism yet. Like, my insurance premium may not change that much if I just build a better set of windows or things like that. So those, like,
so you start to add in data
there's a
of
lot
how
of,
it's prepared, how the building is literally physically prepared for
it's a lot
disaster.
of different old school industries here that don't necessarily coordinate with each other. Or just government, right? So you have government, you have insurance, you have lending, which is a big part of this, and then you have construction. And they are all extremely established old school industries that have their very own different
incentives
things.
Going after the problem in their own way.
Government needs to coordinate those, or they all need to come together to coordinate those. Even lending and insurance is a very interesting asset liability mismatch. Right? You get a mortgage, you get a 30-year mortgage. That needs home insurance. Right? But that insurance is annual. The mortgage is 30 years. What happens when, like it's happening, when the home insurers say, oh, sorry, we don't want to cover this? That then can become a spiral of the mortgage guys pulling the loan. And that can break local property markets. These are kinds of, sort of tail risks that are building in the system that is not being addressed.
Makes a lot of sense. Okay, Sid, my last question for you. Your big bet here was a big, well-served industry was becoming underserved because of climate change. And you went after that newly underserved market. You were hinting about 5-10 minutes ago at a side bet that I think you're making, which is around data, smart talent, AI, all allowing you to provide better, cheaper solutions. Tell me, give me the 1-minute version on what your bet is that's happening from an AI perspective, what the future is here.
Yeah, in our case, it's quite integrated, because we started writing data-based insurance products from our start.
Yes, right. So data and like models and AI was at the core of the way you approached it.
And when you think about what AI can deliver here, there's the climate risk aspect where once you leave the 0 to 15 day short-term window, physics starts to break down. And you need to have a much very different kinds of sophisticated AI models to utilize the hundreds of millions of data points that might be adding to every single day, right? Ocean temps, ice pack depth, all these different things. It's not feasible for a human underwriter to account for all this. So that's one big aspect of AI. The other aspect is that a large amount of insurance workflow is, including underwriting and claims, is manual and qualitative. And when you have aerial imagery of a property, when you have, the ability to digest tens of thousands of documents, and they have data in those, you have maybe decades of loss data. You know every storm that went through your insurance company's properties and what damage it caused and how much did it cost and so on. You now can triangulate across this enormous swath of data, public, private, proprietary, to basically be far sharper at where you write risk, how you write risk, and then service the customer quickly once there is an event. Right. And these are the things that is very much needed to bring better satisfaction for the customer. When you talk about an industry that almost can, like, you could say they rely on delaying payments almost in some ways, right? Or even if they don't, it is extremely long, drawn out process. While clients can sometimes go even bankrupt waiting for an insurance check. It doesn't make any sense. That's not a product that should.
It's not a customer friendly or a consumer friendly product.
So one is to make it consumer friendly. Another is to make your insurance company more resilient. So they're writing risks in a more granular way. And that together will make sure that we don't keep withdrawing coverage in the hard to write areas.
Makes a ton of sense. Sid, thank you for this. This was a fascinating discussion. I think you're going after a very tough market, but one that if you solve is going to help a ton of businesses and a ton of people. So it's a big strategic bet for sure. Thank you for telling us about it, and thank you for joining This Way Forward.
Thank you for having me here.
Cheers, Sid.
Bye.
Thank you.